Hey, good afternoon, everyone. My name is Andrew Demers from the New Hampshire Insurance Department. I think at this point, all of us have received an email from me with the invitation with the link. So I'll get things kicked off here, but before I do, I just want to invite you to do two things. First is that we care about your questions and your participation. So if you have a question at any point in time during any of the presentations, please, we invite you to type them into the chat box. And we will do everything we can at the end of the event to make some time to answer the questions. If for some reason we run out of time or we don't have a chance to address your question, I invite you to send them to me via email. And I think everyone here obviously has the link. They have my email address. So please send me any questions that you have that don't get addressed in the chat box. I'll make sure that they get forwarded to the right person here on our team and that you receive a timely response to your inquiry. Having said that, I'd like to get things kicked off by introducing Commissioner Christopher Nikolopoulos.
Thanks, Andrew. And I'm going to start off by just introducing our panel for today, department staff. Obviously, my name is Chris Nikolopoulos. I'm the commissioner here. We've got DJ Betancourt, our deputy commissioner. We've got Tyler Brennan, our life and health director. James Fox, our P&C director. Marty Mobley, our director of all things legislative and legal. Andrew Demers, who you just met, who's a new addition to our office. He's our information officer here. Welcome, Andrew. And Tiffany Fuller, our outreach coordinator. And I want to thank you all for participating. In some ways, this feels like old home days for me. The vast majority of you I know from some aspect of my life, and it's nice to have you all together. This is an effort by the department to, first effort by the department to have an open discussion with you all about both the legislative session we just experienced, which was unique and unprecedented, and just a bit about what we're looking at for next year. We thought that it was helpful to bring some of our policy experts together. Hopefully you find this a good use of an hour of your time. And if you do, we're happy to hold these again in the future. Again, thanks for attending, and I'll pass it off to DJ.
Thank you very much, Commissioner. Like you, it is great to see so many familiar faces and names here on the call today. Some of you I haven't had the opportunity to see in person for quite some time, and it's great to see so many of you doing well. We have a broad diversity of people at the event today, including providers and members of the public. And as the Commissioner said, part of the goal of today's event is to assist everybody in getting a better understanding of the work that we do here at the department. And we have some of our department's experts that we are confident will help provide that better understanding. But a very important part of the work that we do here is done by our Consumer Services Division. That is a team of 7 people that is led by Keith Nyan, and they do a fantastic job of managing consumer issues, which include those items that come in from both citizens and providers, and working with the carriers to coordinate, to get timely information to them, and where appropriate to fashion a solution to the issues that the consumer has raised. We're very proud of the work that they do, and they take a great deal of pride in helping consumers. And so many of us attending the event today, I know, have been involved with the insurance industry for a long time. But for the average consumer, understanding their insurance policy or whatever issue they're grappling with can be incredibly daunting. And our team is always happy to help them work through the issue. So for any members of the public today or providers that are joining us today that have a consumer issue, do not hesitate to contact the department in the Consumer Services Division. And there are a couple of different ways to do that, either through our website, which is nh.gov/insurance, or via email, which is consumerservices@ins.nh.gov, or by telephone at 800-852-3416. So that's a little bit about our Consumer Services Division. Very, very important, as I said. But now I think we can jump into it. And first up for our panel of experts is Tyler Brennan, Director of our Life and Health Division.
Thanks, DJ. and definitely appreciate the chance to talk today about some of the bills that have passed and give you a little bit of insight about a couple of the bills we're going to be working on this year. Certainly the last session was busier than some of us expected, but maybe best defined by the bills that did not pass. We certainly spent a fair amount of time on those. Four I do want to mention. Two are actually non-insurance bills, but they brush up against insurance coverage. The first one being House Bill 600. This had to do with the newborn screening panel and test strips. It, as I mentioned, it's not an insurance change, but it does change a hospital's ability to use a particular billing code and get coverage for those test strips. It's still negotiated in terms of the reimbursement between a carrier and the provider, and hopefully in many cases the historical negotiations and methodology support any change going forward. But that one is worth mentioning. It certainly did get a lot of airtime and some concerns raised, but turned out to be something that I think was probably pretty easy to live with. The second bill is Senate Bill 97. This had to do with a PBM or their carrier or the carrier's relationship with a retail pharmacy. And the legislation prohibits a carrier from prohibiting a retail pharmacy from mailing prescriptions, and they cannot prohibit a pharmacy from charging for shipping and handling, and they cannot have a higher co-payment for some of those medications that get shipped. Senate Bill 123 is another bill that did look like it was going to be an insurance bill, but ended up as one that's not. And this is the one that dealt with employer-based COVID testing. It required or prohibited an employer from requiring the employee to pay for the test. It did not include some of the earlier terms and requirements that may have impacted insurance more directly. Finally, Senate Bill 124 had several things in it. This is an insurance change. The one I'm going to mention is dealing with Medicare supplemental insurance. And this prohibits a carrier from charging a disabled member, somebody who gets on Medicare before 65, the disabled premium once they turn 65. Pretty simple bill. Looking forward to the future, we've got two bills I wanted to mention. The first is related to a federal change dealing with mental health parity and a comparative analysis that is required of the carriers by the federal government to look at the physical health and the mental health benefits. Those comparative analyses are also supposed to be sent to state regulators. Ironically, the requirements of the comparative analysis actually look a lot like some of the things we did during the mental health parity exam in New Hampshire a couple of years ago. So what we're trying to do is clarify expectations with a change to this section of the statute that deals with requirements for the insurance department to do sort of parity examinations and really build on what is going to be required by the federal government anyway. That should result in some administrative simplification, but by moving a little bit away from kind of the exam authority and the expectations to do an exam, we can also hopefully make more information public. The exam process has a lot of confidentiality, a very process-oriented procedure by the department, and having a more general reference to these federal requirements, expectations, and the comparative analysis may give us some additional flexibility. That same legislation will also remove the existing caps on autism coverage. These caps are currently preempted by federal law when you look at parity laws and the ACA, but they can be confusing either on the legislative front or when carriers are submitting their form filings as to what it means to have these types of caps in New Hampshire statute. So we would be removing those caps to clarify for those different audiences. One of the more significant changes that we've seen is the No Surprises Act, another piece of federal legislation. New Hampshire was one of the first states to pass balanced billing protections. And those protections applied to 4 physician specialties, anesthesiologists, pathologists, emergency medicine, and radiology. The No Surprises Act is quite a bit broader, includes a number of other specialties, and has a lot of additional terms on how to resolve disputes. So what we'd like to do is piggyback on those federal requirements, but keep essentially the regulation of those requirements at the state level. And so the commissioner would resolve any disputes that would be brought forward. And we would replace a reference to commercially reasonable in the statute, which is not always perfectly clear, with the methodology that's in the federal rule and makes reference to this qualifying payment amount in a very specific way of determining what that qualifying payment amount is. The New Hampshire legislation would keep the patient out of the disputes, and that was considered a top priority during the Balanced Billing Study Committee before the New Hampshire legislation passed. And that priority I never saw questioned either in the legislature or by members of that study committee. So that would be incorporated into the legislation as well. It does include benefits administered by TPAs and self-insured employers. It does include air ambulance. And it also includes language to align the state definition of emergency services with that of the federal government so that we're on the same page, we're looking at this the same way, and clarifies our authority as it relates to the ACA. One of the pieces of legislation we will not be introducing, but we do intend to enforce the federal price transparency requirements. These are also a very specific set of rules, federal rules, that require carriers to create machine-readable files showing the prices for healthcare services, including prescription drugs. If we do need to develop a rule, that's our plan at this point. We don't think we need to at the moment, but that would be the approach to enforcing those requirements. And that's what I've got on the life and health side. James is next.
Thank you, Tyler. My name is James Fox, and I am the P&C director. I guess I would like to start, so I'm going to go through like the three major bills that P&C had last year. But I want to, kind of an opening thing, we get these issues that we seek changes on, basically from Consumer Services, Market Conduct Division, who does market conduct, and then Rates and Forms, and then also from industry. But we'll basically, any issue that anybody sees, if you think there is an issue in the insurance regulations that isn't working or is antiquated, feel free to call me and we'll definitely take a look at it. Because our goal is to stay modernized and with the current how insurance is currently operating. So the three bills I'm going to talk about are SB 36, which is the Residency Form that was repealed requirement, HB 520, which was e-delivery of cancellation and non-renewal notices, and also changing slightly the commercial non-renewal standard, and then HB 299, which were the P&C insurance clarifications, which last year there were several. This year there'll be very few. And then the additional one that I could have talked about is SB 124, which pretty much rewrote the travel insurance law 402L, and also the storage insurance law, which is a new law that regulates storage insurance. But those are pretty detailed changes, so that would take a long time to go through. So if anybody specifically is interested in either of those bills and has questions, we can definitely take that offline, and you can call me and we'll talk about it. But going back to the three I'm going to talk about, the first one is the repeal of the Residency Form requirement. So just as a little introduction, New Hampshire's a little different than many other states, we're take all comers. We're the only ones, so if someone seeks auto insurance, personalized auto insurance, you have to sell it to them. And along with that, we have what's called our Residency Form, because we don't have any mandatory insurance. So the Residency Form would basically, to be eligible for insurance, you had to show that one, you're a resident of the state of New Hampshire, or two, that your vehicle was and is exclusively garaged in New Hampshire. And so going back in history, that started, to my knowledge, maybe George Russo's, I know, is online, he might have more information, but to my knowledge, it started in 1992, which is with a bill that actually came out of the Department of Safety. In that bill, they actually inserted three new sections into the insurance law. The first section was the prohibition on non-resident insurance, which made it illegal to have a non-resident get insurance in New Hampshire. The second was to have a cancellation basis, which was to failure to sign the Residency Form. And the third was basically a law that defined what the Residency Form was and made it a crime to, in essence, falsify a Residency Form. So those were the three laws that were passed back in 1992. The reason they were passed back then, to my understanding, was something called rate invasion, that we had people from other states which had higher insurance rates and therefore insurance premium coming into New Hampshire and a lot of times they had like summer homes or winter homes. They'd register their vehicles here, then then they would get, which is a Department of Safety issue, and then they would get the corresponding insurance. That is not how, that's bad for rating, because we're supposed to rate the risks that are in the state, not risks that for someone, say, who lives in New York. So those laws were put in place, but over time, the issue of rate insurance has really gone away. we are still have great rates in New Hampshire and low premiums, but it's not quite as different as it was back in the 90s. But what we have seen now, or what we were seeing, is that what we'd have is, because this was a unique to New Hampshire, we had certain insurance companies that were having difficulty in their systems recognizing the form, that they received the form, and then they would automatically issue cancellation notices. So the problem then is we have actual New Hampshire residents or people garaging their cars here getting cancellations they shouldn't get. And we were almost never seeing someone, I think two people in 10 years, who was actually trying to improperly insure their vehicles in New Hampshire. So what we decided to do was to take it from a front end issue, which is the form, to what is usually typically in a regulatory scheme, a back end issue. So now all the standards remain in place about you have to be a resident of the state of New Hampshire or exclusively garage your car here. If you intentionally get the insurance in New Hampshire that you're not supposed to, you won't get coverage, but any injured party will get coverage. So all the standards stay in place, and that's kind of the hammer that if you do it and the back end, say you have an accident and they say, guess what, you don't live in New Hampshire, and you were basically committing a fraud, then you're not going to get any coverage. And then the coverage that the insurance company does pay, you will be ultimately responsible for reimbursing to the company. So we've gotten rid of an antiquated form that was, in essence, anti-consumer, because we had too many people in the state of New Hampshire getting improper cancellation notices, and then putting the insurance companies in a bad position of sending out what in essence is an illegal cancellation notice because they had the form. So this should solve the residency form issue, which is a great credit to the commissioner for working through that issue. It had been worked on by 2 prior commissioners, and Commissioner Nicolopoulos got it across the finish line. The next bill is a modernization bill. It's HB 520. HB 520 had really 2 aspects. It was e-delivery of cancellation non-renewal notices, and then it changed the commercial non-renewal standards. So the first issue was pretty simple. In the old days, if you're going to get canceled or non-renewed, it had to be by mail or by physical delivery. So basically by mail. And then there was really no electronic option. It wasn't permitted. So to modernize things, because of, most people are online now, the new standard is that you can either mail it, physically deliver it, or you can electronically deliver it. The one issue with the electronic delivery is that if you're going to electronically deliver things, you have to get consent from the insured, and there's about 5 or 6 hoops you have to jump through to get that consent, and it basically all goes to make sure that the person who's consenting is able to receive things electronically. We wouldn't want like an 85-year-old woman saying, I'll take something electronically, and then you ask her, well, do you have a computer? And she says, well, no. So the idea is to make sure that that doesn't happen. The other slight tweak to that is, in the old days, it just said the insurance company could issue the non-renewal cancellation. Now it says the insurance company or agent. That still ultimately goes back to whatever specific agreement. So that's just a permissive thing. It's not a mandatory thing. So it really goes back to just whatever agreement the agent and the insurance company have in a particular situation. So that's what you should look to for that issue. And then the other issue that was kind of complicated, but it really isn't when you boil it down, is the non-renewal standard. So in the old days, if you had a premium increase of above 25%, really what happened was you got a non-renewal notice. We're non-renewing you, and you got another offer of insurance. And I think that goes back to the issue of trying to bring home to someone the level of the increase. But you are also talking about, so the first electronic change, that was for all of our cancellation non-renewal notices. That's all personal lines and all commercial. This next issue about the non-renewals, it's only for commercial insurance. So now, thinking that most commercial entities, if not all, are able to read a notice and understand it. Now if it's above 25%, you get a non-renewal notice, and you get 60 days to basically decide whether you want to continue with that company or not. And we think that's a long enough window for companies to make the decision. If it's 25 or below, you get 30 days to decide whether you're going to stick with that particular insurance company or shop your insurance. And then the other slight difference is if the company misses the non-renewal period, so either 30 days before the non-renewal or 60 days before the non-renewal, then they can still issue the non-renewal, but then they have to basically have a move pro rata into basically a renewal. So if you missed it, say the 60 by 30 days, then you have to at minimum offer a renewal for the 30 days. And then the idea is the company either decides to stay with you, and then they do through the whole renewal period, or they just do decide to leave, then they owe you the pro rata share of that basically extension into the next renewal period. In essence, they still have the right to cancel, so it doesn't change much really. So that's our e-delivery and non-renewal change, which is actually, I know it was a lot of change to the words and it looked complicated, but when you really boil it down, it wasn't really that complicated. Now, the last bill that we had, that was our bill, was HB 229. Those were our clarifications to the law that exists, and there were several of them. So the first one we tackled is actually, I talked about the Department of Safety and them in the Residency Form, and because, just so everybody knows, because a lot of the auto laws are in the Department of Safety, the two agencies kind of both have input on those laws. So in this case, there's a law that's over in the Department of Safety, which is 26418, and it states what the required provisions are for all motor vehicle liability policies. Now, the problem with that law had been it had several paragraphs, but they weren't titled. So anybody, any consumer, or pretty much anybody who looked at it would really have to try to read the whole paragraph and think about what does this go to. So what we decided to do to help everybody out is we titled each section. So now if you look at all the requirements for motor vehicle liability policies, you can see the title, and it's pretty simple to know what it means. The next one is one that, remember I said that we really enjoy input from all quarters, is a change again to 417C, which is the cancellation non-renewal provision for commercial insurance. Now, the other two, so there's three. The other two are personal lines, and they all said specifically that you have to allow basically one ground for cancellation is that the insured is asked. So this one, we put in that language. It wasn't in C, which said basically if the insured requests cancellation, the insurance company has to cancel. Now, after we put that in, the forms unit here, we're very smart, came over and said, we want to know how this operated, because in personal lines, we've always taken the position that if the request comes in to cancel, it must be immediately done. No, you can't require paperwork or anything. A lot of the commercial policies have periods, kind of a notice to the insurance company. So we didn't actually account for that in last year's legislation. So in this year's legislation, we're going to go back and put the notice provision in that the insurance company is permitted to have notice, but we're still going to interpret it consistent with practice because I think that's allowable. But that's one of the reasons why it's important to review when we send the legislation out for review and come back with us whether if you think there are any tweaks that are necessary. The next change is the TPA change. So anybody doesn't know, as third-party administrators. There was this happened at the National Association of Insurance Commissioners level long ago. Basically, it gave us authority over TPAs, and they put it in terms of workers' comp. And we believe that we should have authority. So this is third-party administrators working for insurance companies, that we should have authority over the third-party administrators working for insurance companies very specifically as to all P&C. So basically, we took out all of the language in the TPA law that said in regard to workers' comp, and we inserted in its place in regard to property casualty. So now any third-party administrator working in property casualty lines is regulated under that statute. We did have one, and just so everybody knows, we did have one TPA who pointed out to me that we did not have authority over them because of the old version of the statute, which I said, well, we can fix that. So the next one was commercial modernization. Several of you probably know, a few years ago, we took a look at, particularly in forms and rates through commercial modernization, what we specifically want to look at in terms of approvals and which we want to have filed for purposes of auditing. And the idea was in that period of time was that we wanted to focus on the personal lines because that, protects the little guy. And then we wanted the commercial forms and rates filed, but we wanted them filed in terms of our ability to audit them. So we might look at a percentage of them to kind of monitor the market, but we weren't required to approve them. And that created, again, another problem in that we didn't have a law that specifically said when they would become confidential. So that was a problem. So now we put in last year a law that says they're confidential upon effective date. So that's the little change, because everything used to be approval. And then the two more clarifications that we got a lot of questions on from insurance companies over the years, probably as long as I've been here. One is that if you have a fee that's associated with the policy, a late payment fee, for would be a good example, it has to be reasonably tied to your actual costs, because in our opinion, if it's not reasonably tied to your actual costs, then you're doing a premium charge, and that is not appropriate in a fee. And then the other one is installments. So most people probably know you can either pay for your insurance up front or you can do installments. And there we can have installment fees, but can't be on the first installment, because that's the first opportunity for everybody gets to pay. So if one segment is, because they're paying it all, is not paying a fee, we don't want a fee for that particular payment. So that clarifies, because we got a lot of questions about that. The next one is in terms of rates, personal lines, we want the earning of the policy. So the insurance companies, so let's say I buy an auto policy and it's I pay $600. We don't want it to say, oh, well, it's fully earned on day one and then I cancel it, because we're always saying shop your insurance. That's one of the great things. And then, well, you're going to shop your insurance, but you just lost your $600. So in the normal course, we say in personal lines in particular, commercial can be different. In personal lines, the premium is earned, pro rata during the policy period. So if I get out or halfway through, I would get $300 back, basically. So, but we also put in there, if there's something special about this personal lines coverage, that's not the case, like it's just something that applies in the spring or the summer, or if it's like with respect to a concert, that's one day, that we will totally take a look at it. But the default rule is that we want it to be pro rata earning around the calendar year. The last thing we changed last year in terms of clarification is that another insurance company pointed out to us that we didn't have authority under the non-renewal cancellation provisions for excess coverage, and I didn't really understand why that was. So we put in that we do now have authority under that provision. And that's kind of all the changes we made. And again, there was the travel insurance change and the storage insurance change. I can say that the commissioner and the deputy commissioner spent a lot of time looking at those proposals, and we did have significant input. So we think they are consumer friendly, consumer protective, and still, allow the industry to operate as it needs to. That's my full presentation, and I will toss it over to Marty Mobley, who is our legal coordinator. Take it away, Marty.
Thank you, James. It's good to see everybody. I will briefly touch on some rulemaking that we have done over the past 6 months or so, and what's coming up immediately, and then give a very brief overview of what we are planning to bring forward in the next legislative session. For rulemaking, we've done a lot of cleanup lately of obsolete rules due to statutes that were repealed. The INS 3800 med-mal insurance, INS 4800 and INS 4900 early offers for medical malpractice settlements. All those 3 rules, those chapters have been repealed recently. We've also done a couple of cleanups due to recently passed legislation. In our P&C forms and rates files, we have removed the prior approval for commercial midterm cancellation. That will actually be at JLCAR next month, Joint Legislative Committee on Administrative Rules, because of the statute that was changed, removing that prior approval requirement. And then next week I will be starting the INS 1406 repeal that removes from our rules the residency form requirement. And we couldn't start those rules until the legislation passed requiring the form. So now the legislation has passed and we can remove that from our rules as well, so that there's no conflict. And we've recently started INS 6205, which is Disability Income Protection Insurance. This is the last of the so-called ancillary health rules that we have been working on for the last several years. These rules are based on the NAIC model language. NAIC is National Association of Insurance Commissioners, and as well as the Interstate Insurance Compact standards. So we spent months working with the Interstate Compact. We have, as if you're on my distribution list, you received that ahead of time, and we have now scheduled the hearing on that initial proposal for October 6th. So that's all. Everything that's going on over in the rulemaking. And to get into the legislation that I know everybody's excited about, we have at this point about 13 possible proposals that we're bringing forward next year. At the end of next week, I will be circulating that entire list along with the proposed language. If you are not already on my distribution list, if you could send me an email, I think Tiffany is going to put my email in the chat box, and I will add you to my distribution list. But if in case you cannot access the chat box, my email is martha.v as in victory .mobley, M-O-B as in boy, L-E-Y, at ins.nh.gov. I will add you to my distribution list, and you will be sure to get that list of our proposals along with the language. We are starting next week, as most of you know, the House is having their filing period. It opens Monday and closes Friday, so it's a very short little filing period. We are only going to look at doing 3 bills at the House next week. First, one of them is going to be the NAIC updates to our holding company statutes, and those are some pretty heavy, massive updates, but it's all NAIC model language. I know Representative Hunt had registered to attend today, so if you're online, Representative, you will be hearing from me because I'm going to be reaching out to you to file that for us. Thank you very much. And then we're also going to launch propose the NAIC changes to the non-forfeiture law, and we've had a lot of questions on that, so I know a lot of people are looking forward to that. We are going to reduce the interest rate to the NAIC new standard of 0.15%. And then also next week, we're going to look at filing what I'm calling our omnibus bill. It's strictly non-controversial. There's a lot of different provisions that we're addressing with this. Most all of them are just technical fixes, but there are some clarification tweaks, and that we have a few very minor substance changes, but I don't think there will be any issues with any of these provisions. This is why we're wrapping it all into one big omnibus bill and starting it next week. The other bills that looks at this point to be about 10. We're planning to start in the Senate, which is October 13th through the 27th. This gives us a little more time to refine the language. And when I send out the list next week, we are inviting people to give us their feedback and input. And so it provides us an opportunity to tweak our language and our proposals based on the input we get from y'all. So it may not be the full 10, or we may decide to wrap some together, or we may add another 1 or 2. But that's what we're looking at right now. And the 10 we have right now include updates to our licensing statutes. This includes good cause for revocation of license that is in the adjuster statutes that will mirror the producer statutes. License renewal fees, we're going to clarify that they are non-refundable. And then a couple of other clarifications in those statutes. Financial regulation statutes, updates to our guarantee association statutes, and that's most of that. I think we're looking at NAIC model language there, but we're also working with the Guarantee Association on some suggested language that they are proposing. So we're still refining that language, and we're also going to clarify that external review costs, any costs associated with external review, are credited towards an insurer's administration fee just in the next subsequent years, not carried out over the next 20 years at $10 a year kind of thing. So then our our life and health proposals are incorporating the NAIC model provisions on discount medical plans. We've needed to update that for a while, so we are going to do that this coming year. And something that has been in the works for a couple of years, a major project we've had, is to repeal and reenact our life insurance statute, RSA 408. There were some severely outdated and obsolete provisions in that we needed to update and modernize. So that's what this is going to do. It's been a major work from our life and health division, and we're finally able to move that forward this year. I know Tyler also already mentioned about the No Surprises Act and then mental health parity. So those are also on the horizon. And then in the P&C world, we're proposing to remove prepaid legal contracts from regulation by the insurance department because strictly speaking, these are not insurance products. So we're going to get that off of our regulatory list, and that's not going to be our job anymore. And then we have two other initiatives we're going to bring forward that simplify the department operations. These are non-controversial in nature. One is regarding the fraud access to 911 calls as it pertains to a fraud investigation. And another one is to simplify things for our premium tax division. So that's what we've got going forward for next year. I've been hearing my email bing, so I know some people are sending me their contact information. So I will be updating my list. And as we get the language finalized, you will look for this maybe. I'm hoping to get it out like maybe by the end of Wednesday, but by Friday next week for sure. So that's all from me.
Thanks, Marty. Obviously, we're here and we have some time if people have questions, concerns, or are looking for a little bit more information. If I don't see that, I want to just take a second and thank my staff for indulging the executive team and our desire to put this on and to reach out to all of you. If you didn't take anything away, you should take away that we have some amazing experts here at the department. They answer their calls, answer their phones. If you have questions or concerns, reach out to us. We invited a very wide group of folks to participate in this call because you're all stakeholders and partners with this department for ensuring that we do things right and to the extent possible, do it right the first time. I'm just proud to be here as commissioner and to have helped host this today. I'll give you just a second to post any questions. If not, I'll let you all go to lunch.
Commissioner, we have a question from Lisa Stedman. Lisa, go ahead with your question.
Thank you very much. Can you clarify, no documentation is required for cancellation and it must be done immediately? That's for property and casualty personal lines, correct?
Correct.
And so we have the lost policy report and the LPR is often required by the carriers. Are we saying that that goes away?
I've had this come before. It's not that it goes away, but the statute is clear that, at the request of the insured, and the department has determined that to be at the request of the insured. You could request them to do other things, but you have to allow them the cancellation as of their request for it. We'd have to change the statute to allow you to do other things.
So carriers can still require the paperwork, because I thought I understood that they could.
No, they can't require it. They can request it.
Okay.
So basically, if they get the request for the cancellation, however they do it, they need to honor the cancellation at that point in time. If they want to then request that somebody, submit some paperwork, they could do that, but they can't stop the cancellation.
Thank you.
Great question, Lisa. Thank you.
Next question is from Patrick Jones. Go ahead with your question.
Great. Thank you. This question actually is also for James as well. I know you mentioned prior in regards to installment fees not being premium. And I know before that you were discussing HB 520. Can you confirm which bill you were associating those comments with? I just want to make sure my notes are accurate. I appreciate it.
Sure. That was HB 299.
299. Excellent. Thank you very much.
All right, seeing nothing and realizing it is lunch hour for most of you, thank you for giving us your time. If you have any questions, I'll call someone on my team and or myself, and we're happy to work with you. Have a great day.
Thank you.
You.
Thanks,
Thank you for your
everyone.
time.
Great call.
Thanks for coming.